And he says, how do I decide how much life insurance I need? My wife and I have no kids and both make about $60K a year.
Awesome. So, so what is the ultimate goal of life insurance? This is a pretty good thing to level set. The general goal of life insurance is that if someone were to be disadvantaged by your passing, not just emotionally, but financially, someone depends on you for their well-being, we would argue that there is an insurable interest on your life. So commonly, if you have someone and you bought a house together and you have a mortgage, or maybe you have kids, or you have a spouse that stays at home, or you're a higher earning spouse for a lower earning spouse, those are all things that would substantiate there's an insurable interest on your life. Meaning, if something were to happen to you, you'd want to be able to replace your income and fund other financial goals. Well, then the question comes back to, okay, well, how much should I have? I'll give the easy rule of thumb, Brian, and then why don't you talk through how, if you want to go deeper in the rule of thumb, you can kind of think through that. But generally speaking, a really nice rule of thumb, if you want to think about how much life insurance, especially for young people to start with, is about 10 times your annual income. So if you were to have an income of $60,000, we would say that, okay, maybe a $600,000 life insurance policy would make sense. Or you could even round that up to $750,000 or even round it up to $1 million, because at young ages, for healthy individuals, life insurance is incredibly affordable. It's not something that has to be a super expensive undertaking. So that's kind of the general loose rule of thumb, 10 times your annual income. But what about for this couple, Brian, who doesn't have any kids, or maybe for someone who does have other extenuating circumstances like mortgage and kids? How would you go about deciding an appropriate insurance amount?
I mean, you kind of gave a lot of the breadcrumbs there. Is that you need to think about who's counting on this money, what income is being replaced. So for a couple who don't have kids, you said it, debt. And then I'd also be thinking about the component of time. If your significant other passes away, I mean, that is going to shock us all to the core. And there's probably going to be a period of time that you're just not going to be able to work. I mean, that you might need to have at least some flexibility to pay your debts, pay, living expenses, and so you can get back up on your feet. So that's why it's not going to be a ton. I mean, that's term insurance is our favorite, because we do think that eventually, if you structure this right, enough time with enough discipline, it'd be great if you can just wean off of the insurance and let your assets self-insure you to a large degree. That's the ideal. Now, look, I have clients, we buy permanent insurance or help them locate permanent insurance, because sometimes for estate planning or other type of things, you need to go to permanent. But for a lot of people, term does good work. The other thing I was thinking about with life insurance is just the general fact of, it is one of those things where it's a hard discussion. I like it that it lets people have these discussions about how are we living our life, what do we need for the future, and have those make it a broader thing with wills, with disability insurance, because as we know and we've shared, you're much more likely to become disabled while you're in your working career than you are to die prematurely. So make sure you understand that component. I was trying to think if there was any other elements, but I think that covers most of it.
Did you talk about a timeline too? Like, not all, even when you think about term policies, they're not all created equal. Sometimes you can do 30-year term policies or 20-year term policies or 10-year term policies. You can actually customize the life insurance coverage you have for the amount of shortfall. So if you know you're someone who's within a decade of financial independence, you may not need a 30-year policy. You may need a 10-year policy. Or if you just want to make sure that you're protected over the long term and you're younger-ish and healthier-ish, you can do a 30-year policy and have yourself covered for a really long time. So it's not like a one size has to fit all.
You can't assume you're always going to be insurable. I will say that's always the disclaimer you put out there. But but if you are a person that has good family history, you're healthy, a good practice, you can ladder term policies. So we see people buy 20-year term policies with each child, and that way they phase out over time. The other thing, now I'm going to screw this part up because it's been years since I went through all my training, but there was some anecdotal, or it was not it was actually statistical information that, like, significant others, if you die prematurely, like under 40, there's a good chance that your spouse will remarry. But between 40 to mid 50s, I think it's pretty dry on remarrying. And then I think it was post 60, you see coupling, meaning
Happening
that
again,
people get back
remarriage happens,
together. It just, if you look at the trends of individuals, and that can go into your planning for how you want to handle that. Because if you have a significant other, especially if they don't have, if you don't have kids and other things and they're younger, there's a chance that your need might be shorter on them, marrying again.
Sure.